What's up, guys? Welcome back to the channel. It is February of 2025, and if you are in the crypto world and you've been in the crypto world for any amount of time, probably not how you were expecting February of 2025 to go. However, if you've been here for a while, maybe it doesn't surprise you. Usually when everybody expects something to happen, it doesn't really pan out that way. So this entire cycle has been like that. I think a lot of people, I know a lot of people are super disappointed with the performance of the majority of altcoins up until this point, given that Bitcoin has performed pretty well. Now, if you've been watching me on live streams or whatever, you know I've kind of been, more risk off. And I've been warning that this cycle is different, right? We're not in the environment that we need to be for a parabolic alt season. And that's part of the reason why, we've been able to play this cycle so well. I mean, I don't know anybody else who's been able to manage their risk this cycle better than we have on this channel. So we're going to cover this entire cycle. We're actually going to backtrack, and I'm going to tell you my exact thought process from the beginning of the cycle until now through each phase of the market. And I'm also going to tell you what I'm looking for us to actually get into the environment that we need to be in to have a parabolic alt season, when you do want to be more risk on, where you don't want to be holding a lot of cash, and when you actually want to be, more heavily into not only the market, but into riskier plays, right? So I've been saying since 2022, we're not in that kind of environment. This is an environment to trade, not to hodl, right? And I've gotten a lot of hate for that, but here we are, February of 2025, and despite Bitcoin doing so well, the majority of people in crypto right now are down on their money, right? So look, don't hate the player, hate the game, guys. But that's what we're gonna do and cover in this video. So if you guys enjoy the video, be sure to like and subscribe and all that good stuff. But let's get right into it. So hopping into the charts, what I want to do in this video, because I want to explain this to everybody, because I know there's going to be a lot of different experience levels when it comes to investing, crypto, stock market, whatever. So we want to try to explain, basically, first of all, why has the market played out differently, right? One, why has it played out differently? And two, what hints, should I say, did the market give us? Or how were we able to kind of foresee that even though Bitcoin could show a lot of strength, that alts would not show that same kind of strength, okay? So let's understand first the type of environment Bitcoin is used to being in, okay? So when I say used to being in, I'm gonna say basically from 2010 all the way up until, let's say, 2022, okay? That is the normal environment that Bitcoin is used to being in, okay? After that point, in my opinion, we've been in a different environment, a different business cycle, you could say, all right? So to explain this further on, and I don't want to ramble too much, let's go to the NASDAQ or the stock market. Wow, beautiful. I actually already have it drawn out here. But basically, right, from 2010, this is basically the start of Bitcoin, being traded up until the end of last cycle, okay? The stock market was essentially up and to the right with some pullbacks in between, right? Now, why was that? Well, let's look at the United States interest rate. This is just one part of the story, but I'm oversimplifying here, guys. I'm oversimplifying, okay? So from basically the last financial crisis, okay? So after the last financial crisis, this is before Bitcoin's time, and then to the inception of Bitcoin, all right, all the way up, essentially, until 2021, 2022, low interest rates, right? and just risk on environment, right? Steady inflation, low interest rates, it's the best time to be in the stock market. Now you'll say, well, hey, they actually started raising. They started raising here in 2015, and that is true. But you can see that it wasn't really significant, basically saying the federal funds rate wasn't even above 1% until 2017-18. And again, these things have a lag effect. So pretty much until 2017-18, super easy going. Now, you can see even in crypto in 2017-18, that was actually the peak of this cycle. And then we started to go down. And then we had a relief rally here, but something's very interesting about this relief rally. Something's very interesting about this relief rally, right? This was a Bitcoin only relief rally, meaning just like this entire cycle, Bitcoin did really well and altcoins did not follow. And altcoins only followed after we transitioned into a very quantitative easing, low interest rates, money printing environment. And that only happened because of what happened in 2020. We all know, right? So if I go back to the interest rate chart, essentially what happened in 2020 saved the markets from what would have been likely a steeper recession. Or I don't know if I want to say saved, but it's kind of like kicking the can down the road, right? Because we were basically in the early phases of quantitative tightening, and then March 2020 happened, shoot the rates down to zero. We go to the money supply, and you can see what happened in 2020, parabolic, right? So that gave us a very nice bull market. But to come back to my point here, if we go right now, right, to the interest rates, we have actually just come off the biggest hiking cycle since the 80s. And maybe this doesn't do it justice because it's on a logarithmic scale. So let me actually put this on a normal scale. Now this looks much better or much more realistic. You can see the hiking cycle that we have just come off of has been huge, right? The Fed funds rate went up to 5.5%, right? Hasn't been that high, since early 2000s and before, right? So again, we're in a different environment. And just like 2019, what it's going to take for us to go back into an environment where we can be more risk on is a transition from one business cycle to the other. And that includes cutting the rates, the Fed spending more, going into a more quantitative easing environment. And I cannot predict, or I cannot tell you for certainty when that's going to happen. Again, if you look at the chart here, you would say, hey, they are probably going to continue to cut rates. That's what you would hope for if your main concern is the stock market or crypto. But it's not guaranteed, right? If you go back to the 70s where the Fed was fighting some inflation, they had a hiking cycle, they cut, they raised again. It was a sticky situation, and the markets were, well, I can just show you what the markets did during that time, right? If you go back to the 70s, the markets, it was a trader's market, really. If you just hodled, eventually you'd come out on top, but I got it drawn out right here, right? Let me go put this on a log scale. Bear with me here, guys. Going a monthly. So this is what happened during that time. You kind of have this megaphone pattern where you were, up and down and up and down and up and down until eventually you shot out of there, right? But anything can really happen at this point, right? Anything can really happen. But my point is, I'm explaining to you why this cycle has been different, because we are not yet in the type of environment that Bitcoin has been used to pretty much for its whole life up until 2021, right? Or 2022. Now we're in a different environment, right? So although Bitcoin has done well because it is a less risky asset than altcoins, you haven't seen your altcoins follow up. And another thing to show you guys that we're in a risk-off environment is gold, right? Is gold. Gold has gone to price discovery in 2024. The last time that gold really parabolically broke out into price discovery was actually in 2007, 2008, before that financial crisis. You guys can see it right here, right? This was the previous resistance. It broke out and then it back tested during basically the crash, right, of 2008. But very similarly, we've broken out here now. Is this going to crash and back test with the rest of the markets? We'll have to wait and see. Every market cycle is unique in its own way, but that is something that is kind of a warning light saying, hey, look, the markets are pretty risk off. Pretty risk off here, right? Okay, so I hope that makes sense to everybody. Now let's actually look at Bitcoin to cover what's happened this cycle and why we were able to play this cycle well in terms of a risk off cycle. So one thing that I've said about this cycle is if you played this cycle not accounting for previous cycles and you just traded Bitcoin as if it was, just a new stock or something, it was actually maybe the easiest cycle ever, because the price action from this cycle, you could put it in technical analysis textbooks, right? It was very, whatever way you want to look at it, you want to look at it from an Elliott wave perspective. You got your 1 wave, your 3 wave, and your 5 wave. That's so textbook. You have your 1, your 3, your 5. The 3 is the biggest wave. Extremely textbook. You want to look at it from here. You have this bull flag, right? That broke out perfectly. It's just so many ways to look at it, right? But anyways, let's start from the beginning in the most simplest way, okay? So going into this, with the rate hikes, with being in a different environment, I was already cautious for this entire cycle, meaning I was not super risk on, all right? I've held a strong amount of cash this entire cycle, right? You might say that's me being too conservative, but look, all you can do is manage your risk, right? So let's go to the start, right? What Bitcoin did actually when it bottomed was it actually put in the cleanest bullish divergence on the weekly time frame that Bitcoin has ever put in. You can actually back check Bitcoin's entire history. You will not find a cleaner bullish divergence than this one at the end of 2022, early 2023, okay? This one was extremely clean. And on the weekly time frame, this is significant, right? This is very, very significant. So you had your bullish divergence here, and what did you know? You broke out to the upside, right? Now at this point, people still kind of in disbelief, right? Still kind of in disbelief, including myself, pretty skeptical, not super convinced. However, this next phase, right? The next phase, so this was your first wave, right? Your wave 3 to the upside, in my opinion, this was the most bullish phase of the entire cycle. And the reason for that is the most bullish phase is usually the phase that bears are actually in denial, when nobody would even, I'm telling you guys, during this phase, this was disbelief for bears. Nobody could have expected that alts would do that. And this is when I told you guys we're going to make a new all-time high before the halving. This was with the ETF news, all that stuff. Extremely parabolic, right? Kind of like a left translated cycle. Now I know Bitcoin did go higher here, but again, we made a new all-time high before the halving, right? Something Bitcoin has never done. Just like we went below the previous cycle high. That's also something Bitcoin has never done before, okay? So there you go. You had this peak here during March, right? Now, you could say here in May, you put in a very, not technically a bearish divergence, but you were losing steam. You were losing steam, right? So you were basically essentially consolidating, right? Essentially consolidating, and you ended up forming, a pretty nice bull flag. Now, something that I recognized very early on in this cycle was in terms of the RSI, you were acting very similarly to 2021. And people, again, I got a lot of hate for this because people are saying there's no way, this is still the halving year. This isn't the post-halving year like 2021 was in its respective cycle. But if you see here, you had your initial peak, right? Initial peak. And then you had an end of the year rally, but a lower peak on the RSI, right? So an end of the year rally and a lower peak on the RSI. Now this rally was more focused in Bitcoin, right? Bitcoin did very well, but altcoins actually didn't do well at all. But you guys can see on the RSI, the structure is extremely similar, and even on the MACD, right? So I'm just showing you guys this because this is a similarity that I picked up on really early on in this cycle, and it played out basically perfectly, right? So you had two big peaks in the weekly RSI, right? So you had your first peak came down, and then your second peak. This one, you had your first peak, you came down, and then your second peak, which was even higher, right? Because like I said, this cycle has been, more of a Bitcoin focused cycle. So we've come down, we've actually got the bearish cross there on the weekly. So in my opinion, there's likely more room to the downside for Bitcoin. It doesn't mean immediately, but it means, I think eventually on a monthly time frame, right? On a monthly time frame, you'll likely come back to those monthly MAs. And you can see here on the monthly MACD, you're starting to kind of flatten out. And the thing with the monthly is that by the time the monthly actually rolls over, you can see from last cycle or the cycle before, the top is months and months behind you, right? So you can't really wait for the monthly to roll over because it's obviously a lagging indicator, but yeah, it's a lot of similarities, right? And I would expect at minimum Bitcoin to eventually come back to the monthly MAs, which is going to be, somewhere in the 70,000s, at minimum. And again, a lot of this is going to depend on the stock market. The S&P is at all-time highs, right? So eventually this is going to correct back down to its monthlies too, in my opinion. And when that happens, again, I can't say it's going to happen right now, but eventually it does happen. And when that eventually does happen, that's when you'll see the bigger correction for Bitcoin, right? But the reality is it doesn't really matter if you're in altcoins because, Bitcoin's sitting here above 90,000 and most alts are down more than 50%. So again, it's not really the time to just be buying every dip, right? We're not in that kind of environment. And I showed you guys what we would like to see to be in that kind of environment. And again, very similar here. You can look at Ethereum, Bitcoin. Look at 2019, it was going down. And only after Ethereum, Bitcoin found a bottom and reversed its trend, right? This was your indicator that we will have a bullish phase for alts. And this was during the transition from quantitative tightening to quantitative easing. So we want to see something like that again to be bullish on altcoins, right? So I hope that's clear for everybody. I hope that's clear. Now, in terms of this cycle, right? The way I've played it, and you guys can check my Twitter, but essentially, we've just played the big moves up. So, people will want to say, oh, you're so bearish, this and that, but we were actually longing Bitcoin from 54K, right? From 54K, and there's proof on my Twitter. Here's right here, long Bitcoin 54.3, right? That's posted in the Wolf Room. So we long Bitcoin from 54.3 and a bunch of entries from 54 all the way to 65, and we caught this entire move up, not just on Bitcoin, but Ethereum, Solana, all this stuff. And I actually didn't short Bitcoin until we went to 108,000 the first time. We shorted from 107. Again, that is posted on my Twitter as well. And during Christmas, right, people are going to say, oh, well, it's easy to say now that the market is cooked. But if you look at my pinned tweet here, I said the top is in, with a little bit of humor on Christmas. But I did tell you guys the top is in. Merry Christmas, right? So, that was over here. And if we look at others, that was before altcoins went down, 40, 50% on average, right? This was December here, right? December. So, again, you're never going to play the market exactly perfectly, but I think hopefully you guys get something from this video. Everything that I've kind of shown you here is what I would be looking for to, to be more risk on again, basically, to be in the environment that everybody wants to be in. So that's basically all I got today, guys. That's all I got for you. I hope you got something out of the video. I hope the market is a little more clear to you now as to why it's behaved this way. And if you are somebody who wants to get more into trading, you want a good community to be a part of, you want weekly updates, you want access to all the trades that I take personally, you can check out the links in the bio, as well as follow me on Twitter. But that's pretty much going to do it for this video. So make sure to like, subscribe, comment, whatever. But stay safe, stay blessed. We'll see you guys soon.